Chinese market surged with the Hang Seng up more than 3.5%, a closing record. An Cheng reports from Hong Kong. We'll have more on the market reactions a little bit later, but first, let's get more insight into China's latest stimulus measures. Einar Tangen is a senior fellow at the Taihe Institute and also a chairman of Asia Narratives and joins us from Beijing. Einar, how much of a surprise was this latest move by China's central bank?
People just didn't understand exactly what the shape of it would be. And China's government seems very aggressive. This is the most aggressive stimulus package since the pandemic. China had to issue 2 trillion yuan in special sovereign bonds, cut reserve requirements by 50 basis points, physical measures to focus on consumer subsidies, government debt, Shanghai, Shenzhen to lift key home price curbs. And Chinese blue chips are showing it. They're up 16%. Shanghai Composite jumped 13%. Hong Kong index up 13%. This is slashing the reserve requirements for banks, lowering borrowing costs, issuing special sovereign bonds worth about 284 billion, and an injection into banks of about 142 billion US dollars. It's all aimed at stabilizing the economy, reducing deposits needed to buy a second home. They expect the combination of lower interest rates and deposits to help about 50 million households reduce their total interest bill by about 150 billion yuan a year.
Einar, at what point will we know if this will lead to an actual rebound in China's economic growth?
Well, it's going to take at least 3 data points, so we'll know finally as we get towards the end of the year whether this was enough to push the rate back up to 5%, which was the goal of the government.
And can we expect more fiscal measures before the end of the year?
Yeah, they've indicated that there's going to be more out there. They're interested in stimulating spending, and there's going to be probably further rate cuts, freeing up liquidity in the market, allowing more banks to issue more debt.
And what will it mean, and you already mentioned this briefly, what will it mean for China's troubled real estate market?
Well, this is aimed at stabilizing it. As I said, there is a number of measures. A lot of those affect individuals. But as I said, it's going to free up capital for the real estate entities, allowing people to buy second homes with much lower amounts. They're still concerned about a property bubble. Boosting prices beyond, the normative values. So it's going to be cautious, but you're going to expect, they've already said that this is very clearly something where they feel concerned about the rate at 5%, and they are using the tools to get it there. And
what about investor confidence, Einar?
Well, this is a thing. I mean, we're going to have to see this in the next, at least the next 2 data reporting periods over the next 2 months. What effect does this have in terms of expenditures? And does it do what it's supposed to? As I mentioned, they want to put a lot of money back into the hands of homeowners by reducing the amount that they have to pay monthly on their mortgages. And they're hoping that money will go into the economy and start this dual circulation, which is, led by consumption and then attracts investment from overseas.
So what will you be looking for, Einar, in the coming weeks and months in terms of China's economy and also other stimulus measures?
Well, beyond, as I said, more rate cuts, maybe some more direct action, but it's, they're very, very cautious right now in terms of going too far. They realize that maybe they didn't go far enough before, but they don't want to just wide open the gates. They saw what happened during the global meltdown, and they don't want to repeat that just by adding debt that can be avoided. Remember, China is 1/3 of the world's growth, and they want to make sure that these benefits of the Chinese market are being spread elsewhere. And a lot of overseas investors are very happy, especially private equity funds, which are now in a position where they can start offloading some of the assets that they acquired.
Can you give us a sense of how we can compare China's stimulus efforts to other international economic packages?
Well, what was interesting is this rate cut mirrors what happened in the United States, and they're able to do that without affecting the yuan, and that is very important. So you could see a situation where rate cuts in the United States are mirrored in China because it doesn't change the yuan-dollar relationship, except as far as confidence goes in different ones.
And finally, Einar, impact on the global economy. You already touched on this. China is the second biggest economy in the world, and what China does impacts the rest of the world.
Absolutely. As I said, 1/3 of this year's growth is going to depend on China. So this is a bellwether for many, many nations. They're hoping that this will get things back on track despite all the bad news in terms of conflicts and things like that, logistical issues. This real desire to get back to some sort of normative period where you're starting to see some growth. Really welcome news for Europe. Which hopefully will be able to sell some of their goods in China and help themselves get out of the slump that they're in.